I'm going to tell you a story about Melvin and Goldie. They had $120,000 in income. They were in the 12% tax bracket, and yet they paid a 50% tax on a withdrawal they made to go on vacation because of Social Security. You see, Social Security phantom tax is a real thing, and I'm going to show you what it is in today's video. The bad thing about Social Security phantom taxes is that people can pay them over and over again and never know it. And if you do that, it adds up and it can really destroy a financial plan. So in this video, I'm going to show you what the Social Security phantom tax is, how it happens, and what you can do to reduce or avoid it. Hey everyone, I'm Nick Davis, founder of Brindle and Bay Wealth Management, and I'm here to show you how to retire with calmness and clarity. You see, getting yourself to that next chapter, the phase that you've been preparing for, retirement, it should be something that's celebrated. And yet many people mix it with a lot of angst and worry. And you know, they're not wrong if you're worrying a little bit, because there's a lot of things that can go wrong. I mean, to get yourself to the point of retirement is a lot easier than getting yourself through retirement. Think about it. To get to retirement, you need to save the right amount of money. You need to save it in the right types of taxable accounts, meaning being diversified in how you save. Don't overpay in fees. Make sure that you have good term insurance and be diversified, right? Those are things that you can handle. However, to get through retirement, we have market volatility, we have coordination of Social Security and other benefits, we have inflation, and then we have taxes. And then here I am introducing this idea of phantom taxes, something that's even, you maybe have never even heard of. And so it's not as easy as we'd like it to be. But we want to help you retire with calmness and clarity, which is why we try to point these things out and give you some solutions. Because phantom taxes are sort of like termites. I've often referred to inflation like termites, but phantom taxes are also like termites. They're something that you're not seeing unless you're looking for them, and they really can be devastating to your household. Well, in this case, paying a tax over and over again, or extra taxes over and over again, just is not good. So what are phantom taxes? Phantom taxes are caused by Social Security income, investment income, and other things that cause you to pay more in Medicare, for example. And all these things are just extra layers of taxes that we refer to as phantom taxes. Now, it is helpful for you to understand how Social Security is taxed, because I'm going to make a couple of assumptions with this video. But I did make a video on how Social Security is taxed, and I'm going to link it here so you can either go and watch that, and I'm going to also put the link in the video description. So if you want to wait to the end and then follow that link to the how Social Security is taxed video, you can understand that your Social Security is not taxed completely straight across the board. It's actually taxed based on something called combined income. And to better understand that, you'll want to go watch that video. But the main point is that every dollar that you take out of your IRA or 401k or pension causes Social Security to be drug into taxation and makes our progressive tax system not as straightforward as it was before you retired. So again, every dollar you pull out of your 401k or your IRA causes more Social Security to be taxed. So for example, you might take $5,000 out of your IRA in addition to your other income. And because you're in the 12% tax bracket, you might think, well, I'm going to just pay 12%, which is $600 on that. But because you're retired and you have Social Security, you also have an additional $4,250 of Social Security that's being taxed at 12% as well. And so it's not as straightforward. So you pay your $600 plus an additional tax because of that Social Security coming in. Now let's talk about Melvin and Goldie, $120,000 in income, 12% tax bracket. They go to take $5,000 out to go on a vacation, thinking it was going to cost them 12% in taxes. In reality, that $5,000 cost them $2,500 in taxes. So let's take a look at what happened. I'm going to show you an image here of what that looks like. And first, you're going to see that the taxable IRA distribution was $45,000, Social Security was $60,000, and the taxable Social Security benefits is $45,100. Again, you'd have to watch that video to understand why that is, but just because they have $60,000 in Social Security doesn't mean it's all going to be taxed. $45,100 is their combined income. And then right below that, you see $15,000 in capital gains. And because they are below a certain threshold, they're not going to be taxed on those $15,000 in capital gains. And then when we look right below that, we see that the total tax is $7,485. Not too bad. $120,000 in income, you're in the 12% tax bracket, nothing to really complain about, right? So they reasoned that they could take an extra vacation and pull $5,000 out of their IRA in addition to this income that we're talking about, thinking it was going to be 12%, and they found out that it wasn't. So now we have $5,000 added for the vacation. So up from $45,000, we have a $50,000 taxable IRA distribution. And then the Social Security inclusion was no longer $45,100, it's up to $49,350. So remember, those extra dollars that came out of the IRA included more Social Security to be taxed. We look below that and it says now taxable. The long-term capital gains that were not taxable are now included to be taxed. And we see below all of these things that the tax bill is $9,982. So that is about $10,000 up from $7,500, so about a $2,500 tax bill. So let's look at how that happened. So $5,000 from the IRA taxed at 12% is $600. The additional Social Security amount, $4,250 at $510. And now capital gains are going to be taxed at 15% because they went above that threshold. So the total of all those three taxes are $2,497.50, $2,500 just for taking the $5,000 out. So would they have even known that this happened to them? Probably not, because they may not have ever looked to see what the difference would have been. And maybe they do that for multiple years, year after year, and those years can add up. This is why financial planners should ask for your taxes every single year. It's because they're trying to identify where these phantom taxes may happen so that you can avoid them. So your financial planner should be collecting your taxes from you every year for at least 3 reasons. Okay, so before you're retired, you're looking at it because you're trying to prioritize how many dollars go into each different type of tax bucket. How many dollars should go in the HSA, how many in the 401k, how many in the Roth 401k, how many in the non-qualified accounts, how much money should go into the emergency savings. Those things should be prioritized based on your taxes before you retire. And then after you retire, you want to look at it for another reason. And that is you want to make sure that you are avoiding your Social Security phantom taxes like this. You should be presented with different options for how to take money out in case there's an opportunity to avoid an unnecessary tax. A version of what we do for our clients looks like this. This is just a simple tax pro forma with different options for how a person may take their money out for the year, and any variation of that can be created. However, at least one time a year, you should strategize how you're going to take the money out, and that happens after you retire. So let's talk about Melvin and Goldie again for a moment. If they would have been made aware of this, would they have made a different decision? Probably. For example, if they would have taken the $5,000 out of a Roth IRA instead of out of their 401k or traditional IRA, they could have saved a huge tax bill. And doing that for more than a couple of years, that adds up. And it's things like this that make your plan better. Now, you may have never heard of this before. It sounds spooky. It's real, right? And things like this in Medicare means testing, which some of you have heard of IRMA testing, which causes your Social Security to be reduced because you pay more for Medicare Part B and D in your premiums than other people because you have too many of those dollars coming from pensions and 401ks and IRAs. Those things really need to be planned for. They really need to be watched out for so that you can really do the best that you can possibly do in your plan. And you really want to plan now rather than later, because if you wait until the last minute, you have less options. If you've got time on your side, you can at least prepare and plan. So if you're not yet retired, you want to be planning on how you're saving those dollars into those buckets so that you can have the best possible situation in the future. If you're already retired, you want to be looking at your options and alternatives when you take that money out, just to be as wise as you can possibly be. Because if you're preparing for that next chapter and you're living in that next phase of life, you really want to retire with calmness and clarity. You want to have a lot of peace around what you're doing and know that you're doing the best that you can possibly do. And as the old saying goes, you want to plan now rather than later. So looking in advance, whether you're 10 years away from retirement, whether you're 3 years away from retirement, or whether you're already retired, there's more you can do earlier than later. And you want to have the strongest plan you can possibly have so you feel good about it and you can retire with calmness and clarity. And when you move into that next phase of your life, it's more about the experiences you're creating and less about things like taxes and Social Security and all of the numbers. And if you like this video, please consider liking and subscribing. We'll see you in the next video. Hey everybody, Nick Davis here. Thanks for watching. If you enjoy this, please consider subscribing. Also, if you would like to see the way that we help people master their retirement money so that they can go on to that next phase with calmness and joy, take a look at us at brindleandbay.com.